Hi, I'm Jill Pursell, Managing Director of the Kafafian Group. This video is a continuation of TKG's short banking series. What I would like to talk about today is what's happening in the branches. The pandemic and resulting stay-at-home orders and social distancing forced banks to change how they interact with their customers. As of today, more than 90% of the states in the U.S. are under these orders. Speaking with our clients and as a customer of a local community bank, some of the actions taken in the branches included the hours were reduced and many are closed on Saturday. Lobbies were closed with access by appointment only. Institutions who have the technology are instructing customers to go online to apply for a mortgage or home equity loan or open an account. It is most likely that banks who do not have that technology are requiring customers to make an appointment with someone in the branch. Drive-ups have been kept open, allowing customers to conduct their transactions in addition to their continued access to night drops and ATMs. There is also a percentage of financial institutions who temporarily close certain locations. For general servicing questions, customers are being encouraged to use the bank's call center. As you can see, there were a lot of changes made in a very short time. What these actions have done is force customers to change how they bank with their financial institution. This includes forcing the older client base to either reach out to the call center or even utilize electronic banking. I can guarantee that same elderly customer who frequented your branch every morning for a hot cup of coffee or free donuts and cookies have already made a friend in your call center. With the federal government extending the stay-at-home guidelines to 30 days or through the month of April, customers will continue to be forced to use alternative delivery channels and adapt to that change. When the stay-at-home orders are actually lifted, it's not as if we'll be turning on a switch. The change will come gradual. I have two questions for you. How prepared are you to take advantage of this unfortunate situation to transform your branch network? Did the change in the branch operations uncover inadequacies in the technology or digital channels you offer your customers or how it is utilized? Here are some thoughts on how you can reduce and reallocate costs to improve the performance of your bank. Let's first look at the future branch model. Branch hours. Requiring customers to make an appointment may not be something you would want to continue for all your offices, but it could continue for some. How about using a hub and spoke approach? You could have a branch in one region, open with limited hours, and those in close proximity service customers by appointment only. Limiting the hours would allow the relationship managers to get out of the office and interact with their existing customers and develop new business. The branch staffing. Limiting the hours of the branches allows the office to operate using fewer employees. It will be important for you to have the right employees in the branches. This will require you to have a blend of talent of individuals who are good at servicing from the aspect of the transactions you want them to perform. And most importantly, your best employees who demonstrate strength in their ability to build and expand existing relationships and develop new business. For those employees who are better at servicing, what we refer to as order takers, they may be great candidates for your call center. Make necessary salary adjustments. Reducing branch staff would allow you to provide higher salaries to your relationship managers and reward them for the growth and the performance of the branch. Now, those branches that you temporarily closed, are they critical to the customer relationship? Are there any you should permanently close? As it relates to technology, I recommend you develop a team with representation from the retail offices, call center, and operations to discuss what is working well, what is not, and identify the gaps. They should create a list of recommendations for improvements to improve efficiencies and the customer experience. For example, as customers increase their utilization of your mobile banking platform to make deposits, did you uncover your limits were too low, resulting in a flood of calls? Do you offer your customers the ability to open an account or apply for loans online? With the rise in online purchases, since most stores are closed, were customer transactions rejected because of your low purchase limits? Do you have automated text alerts? Did the number of fraud alerts increase requiring manual research? With the increased calls coming into your call center, did you have the technology needed to track the volume, the types of calls, the wait times? What about their ability to open accounts and accept loan applications? Do they have access to information customers requested, or were those requests pushed back into the branch? Addressing your technology weaknesses will be critical to your future branch strategy. Some will require you to make certain investments, but there's a lot of work that can be done to utilize the technology you already have. Over the next month, take some time and reconsider your branch strategy for the future, especially as customers grow accustomed to their new way of banking. As always, please feel free to reach out to me or any one of our TKG team with comments on this video or any of our banking shorts. Thank you, and I hope you and your families, both at home and at work, remain safe and well.